In this video, we will go over various income sources that you have to report when applying for a subsidized health insurance plan. This is very, very important to know in order to avoid paying back the advanced premium tax credits when you file your tax return. Correct income reporting determines the eligibility for certain subsidies or advanced premium tax credits or discounts, whatever you want to call it. Why this is important? It's because if you don't estimate correctly your income, or if you don't report certain income, or you report the income that you are not required, this will result in incorrect subsidy calculation, and you can either have to pay back the advanced premium tax credits or the subsidy at the tax time, or you end up overpaying for your health insurance. This is why it's very important to calculate and estimate it correctly in order to avoid surprises at tax time. You can look at your tax return form 1040 and find the AGI or adjusted gross income. This is the most accurate income that would need to be reported on your health insurance application. But keep in mind that at the time of application, you don't know your AGI since you will be doing taxes 1 year from now. So do your best to estimate to project this income. Make sure to watch this video until the end, as I will give a real-life example and updates on the new stimulus payments approved by the Coronavirus Aid Relief and Economic Security Act, and go over the rules for reporting certain income in the covered California. In particular, this affects those people who are receiving the unemployment benefits plus the $600 additional unemployment, and this amount might be higher than a person was making while working full-time before losing their jobs. Again, it sounds strange, but if a person was working full-time and making $3,000 per month, now this person receives over $4,000 in unemployment benefits each month, which is taxable income, by the way, and it's higher. I will also update the description of this video as new information becomes available. So please subscribe to my YouTube channel to stay up to date on the updates and new videos. Okay, so let's go over various income types that are required to be included when completing your health insurance application. The most common income is employment and self-employment income, and it includes wages, salary, and if you're self-employed, you will get a 1099. If you are working for a company, you usually get a W-2. So as well, here in this category, you would include any foreign income, farming or fishing, and so on. The next category would be government assistance income. That would include Social Security retirement, Social Security disability, Social Security survivors, unemployment, jury duty pay, and so on. You would have to speak with your tax preparer and find out what income is taxable and what not from this category. Next would be the investment and interest income, and this would include all sorts of capital gains, interest income, ordinary or qualified dividends, and other gains or losses. The next category would be retirement income. And again, you would have to speak with your tax preparer and see what is taxable, what's not here. But here is where you include your retirement or pension income or railroad retirement benefits. Also, education, scholarships, awards, and grants are also considered income in certain cases, so you would include those here as well, assuming you speak with your CPA and figure it out if it's taxable or not. So all other taxable income that might include rental income, royalties, canceled debts, court awards, any sort of taxable refunds, credits, or offsets, alimony, other taxable income would be included on your health insurance application for the purpose of determining your adjusted gross income as well. Okay, so now let's see if the tax credits or stimulus payments will be considered countable income for purposes of determining eligibility for the financial help and premium assistance available through Covered California. The answer is no. The tax credits or stimulus payments are not included in your income, at least so far, for purposes of eligibility for any financial help available through Covered California. Now, let's see if that extra $600 per week pandemic unemployment compensation payments will be considered countable income for purposes of determining eligibility for financial help and premium assistance through Covered California. And in this case, yes, all unemployment benefits, including the extra $600 per week, are included in your income for purposes of eligibility for financial help available through Covered California. So I hope this part is clear. Now, very often I'm asked how to calculate the income per year or per month. In other words, if you lost your job because of COVID, how would you estimate your income to find out if you qualify for either medi-cal, which is Medicaid in California, or financial help through Covered California? Should you report your current monthly income or your annual income? Well, you may choose to estimate your income on a monthly or annual basis. It's up to you. What is important is that you carefully and correctly include all countable income that I've mentioned in this video for the entire year. Making errors could prevent you from receiving all financial help you are eligible for, or it could cause you to receive more financial help than you are eligible for, requiring you to repay the financial help when you file your taxes. Covered California eligibility is based on annual income, and the system will calculate an annual income if you enter your income on a monthly basis. On the other hand, medi-cal eligibility is based on monthly income, and the system will calculate a monthly income. I know it's confusing, but if you have questions, please feel free to reach out and I'll do my best to help. Now, let's look at an example to see how the correct estimation of income affects how much you pay for your health insurance. Let's say that we have someone who is 30 years old, living in San Francisco, California, employed and making $3,000 a month. This person applies for health insurance during the open enrollment and has no idea about how the COVID-19 would turn the world upside down just yet. So based on this estimates, here are some health insurance options that this person could qualify for. As you can see, based on the annual estimated income of $36,000, this person qualifies for up to $250.62 per month in advance premium tax credits. This amount reduces the total premium that this person would otherwise have to pay for health insurance. Let's say that this person selected Kaiser Bronze plan and has been paying $119.65 each month. So no matter what plan this person selects, the discount, if you may call it this way, would be $250.62, and it's based on the income, age, and zip code reported at the time of application. That's it. It's so simple. Well, until it's not. So what happens next? Next, the coronavirus hits, and this person loses their job. Now, this person has no job and starts receiving unemployment benefits starting April 1st, 2020. So how in the world would we know what the estimated annual income would be? Well, the unemployment benefits estimated for this person would be $450 per week from the state plus $600 federal. So total for month now would be $4,200 instead of $3,000 a month, right? This is higher than the salary, so it needs to be updated. In this case, we would have to report the income change in the Covered California, and here's the math. And of course, this is estimated. So January through March, this person received $3,000 each month from actively working. So that would be $9,000 for this period. April through July, let's say that his total unemployment is 16,800. So what happens next? Well, let's assume this person goes back to work in August, keeping the same salary at $3,000 a month. So August through December, his total income from job would be $15,000. So in total, this person has made $40,800 per year, which is higher than they previously estimated, right? At this income level, the subsidy is $200.18 per month. If this person does nothing during the year, when they file taxes, they will have to pay back the difference, which is roughly $50 per month. If we multiply the amount per year, we have about $600 difference that this person needs to pay back for the advance premium tax credit they received. Again, there is no penalty or extra fees if you don't update your income on time, but the thing is that you have to pay back all this amount at once when you file taxes, and that's not easy or desirable. You know, the other way could be true as well. What if you overestimate your income and have to pay more each month for your health insurance? If you don't update your income during the year, you will see a credit when you file taxes. So make sure to correctly estimate your income or keep in touch with the insurance agent that manages your exchange health insurance account. If you don't have an agent, you can delegate me in the Covered California, and I can help you figure all this out. Remember, if you need help, please feel free to reach out. I will gladly help. I hope this information was useful and helpful for you. If you have a general question, please feel free to comment below. If you have an issue with your Covered California account or have a specific question, please feel free to reach out directly, or you can delegate me as your agent, and I'll do my best to help you solve the issue. I am a certified insurance with Covered California, agent with Covered California, and I am familiar with most issues and have successfully helped many consumers in the past. Thank you for watching. Please like, share, and subscribe to our channel, and I will see you in the next video.